ahead, and right now, at least the GIFT Nifty is indicating just a mildly positive start, but don't be fooled by that figure. That was going to change the minute market opens. Let's also analyze what's happening within the IT pack right now. And we've been talking about the buyback proceeds, etc. Let's try and understand this a little bit better as to what does it really mean for the IT sector. And we've got Sushovan Nayak joining in from Anand Rathi Institutional Equities. Sushovan, great to have you on ET now. Thanks for your time. Tell me, with buybacks losing their tax edge for promoters, do you now expect cash-rich giants like TCS and Infosys to shift back to aggressive dividend payouts?
Uh, I hope my voice is audible, Aisha.
Yes, we can hear you.
Yeah. So, in fact, I believe it's a contrary because from a minority shareholder perspective, earlier the buybacks used to be deemed dividend, right? So this was taxed at more or less the marginal tax rate. But now, being considered as capital gains, you'll be basically taxing it at 12.5 or 20%, depending upon the long-term or the short-term capital gains tax. So, the guys who have significant cash in their books, and given the macro environment, I believe someone like a Wipro, LTIM, TCS, they may continue to do buybacks. In fact, I believe that we'll see a slew of buybacks going forward because I think post the earlier norms of starting October 24, the buybacks have just slowed down because of the tax inefficiencies rather, right? I think that has been a fantastic step which has been taken by the government to basically bring it under the ambit of capital gains tax. As far as your question on the promoter bit is concerned, see, the way it works is from a promoter perspective, if they apply for a buyback, a corporate will be subject to 22% and a domestic corporate, and anyone else will be subject to 30%. So even if I compare it vis-a-vis, let's say, if you give it as a dividend, then I will be again subject to my marginal tax rate, which will be higher than the 30% in the worst possible scenario, right? From that perspective, I think buyback is the way to go rather than dividends. Is my submission here.
Do you think companies will now aggressively look at buybacks, instead of dividends, as you, enlisted the, positives for buyback? There's also the argument that, the company should be investing for the future technologies there. Uh, how do you look at these two arguments?
So that's a fair point. But see, at the end of the day, if we need to understand where exactly are IT services companies, right? At the end of the day, the focus is on execution, and the AI trade is another trade altogether. But from an IT perspective, where exactly can we add value in the value chain, right? At the end of the day, 80% is capex related. It'll be like 80 to 90%, and 10% will be where IT services folks will be able to add value. We end up becoming implementation partners for someone like a Snowflakes or a Databricks, and possibly we help in the cloud modernization, data modernization, so on and so forth. I believe getting into deep tech or AI is not something that is a core competency of the IT sector. At the end of the day, my view here is that uh, as we see this cloud capex that is going on, at some point of time, the revenue or the monetization of the AI capex becomes extremely important. And that is why you will have to bring enterprises to the cloud. You will have to ensure that the enterprise data is harmonized, modernized, and there's a proper data governance framework so that they will be able to move everything to the cloud in a proper manner. And that is where Indian IT services companies will come into play. The question is, when is it going to happen? That will potentially happen when you come to realize that you're putting significantly aggressive cloud capex, but you're not able to monetize it properly. When the importance for monetization comes in, that is when I think the Indian IT services will come into play. That's my limited submission here.
Um, Sushovan, so when you're looking at the latest change in the budget with regard to buyback, there are certain companies like a TCS where there is a corporate structure on top, where buyback may actually be beneficial for promoters.
Yeah.
But then there are companies like Infosys where there are individuals sitting in the promoter group, which means that they will likely have to pay a 30% tax, if I'm not wrong. Is that reading correct? And could you give us some flavor around maybe out of at least the top five, where is the shareholding corporate versus individual?
So I think just to give you an example, like let's say LTI Mindtree, right? L&T would be the primary shareholder. Someone like an Infosys, I completely agree with you. There, the individuals are there, but at the end of the day, Infosys has already gone for the buyback, right? So I would not, I mean, look at it that it will aggressively go for a buyback again, unless and until they believe that from a capital allocation perspective, it makes sense. Then if I look at a TCS again, it's Tata Sons, so they will also want to go for a buyback, but presently their focus from a capital allocation perspective is on the data center part of the business, right? So that is where the capex will increase rather than going for a buyback. But having said that, it is always an option that is available for them because presently the stock is also uh, 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 quite fairly valued. That's one. And these guys also have significant amount of cash reserves, right? If you look at, let's say, uh, and LTIM, it's almost $1.5 billion. If you say Wipro, it's I think $5 billion of cash is what they have in their books. And given that their Q4 guidance has not been that great, and buyback will be effective, the new norms will be effective from 1st April. So I believe that is someone which may be ripe for doing a buyback. Someone like an LTIM also is what I believe. HCL Tech has been doing a lot of M&As. So this is something that they may consider over a period of time after they are done with the M&A focus as such. That is the way I would look at it.
Right, Sushovan. Thanks so much for your time today and giving us that insight on how really to read this for the IT sector. Good speaking with you.
Thank you.